What's up, everyone? My name's Robbie. This is Robbie and Mila, and today we're talking about the best large cap dividend ETF. So this is a continuation of my series on the best large cap dividend ETF. So far we've gone over the best large cap value ETF, best large cap growth, best large cap momentum. I think that's all we've done so far. This is the best large cap dividend ETF. I think this is the last of the large cap ETF series. I think next up is the mid cap ETF series. We have 5 different ETFs to compare in this video. Let's go ahead and let's get started. All right, so before we move on, I do have a favor to ask you. So I'm trying to get to 2,000 subs. If you like my videos, if you're enjoying these, just consider subscribing. Okay, so we have 5 ETFs here. Now, I did qualify these ETFs by making sure they at least have a dividend yield of 2.5% or higher. So nothing under 2.5% in this video. And then I also made sure that I didn't put these high dividend yield ETFs in that I don't think are going to have potential capital appreciation. So that's, for an example, a QYLD. I can do a video on those separately, but these are really ETFs that probably going to have more capital appreciation plus paid dividends. So first up we have SPYD. This is the Spider Portfolio S&P 500 High Dividends ETF. Then we have VYM, Vanguard High Dividend Yield Index Fund ETF. We have SCHD, the Schwab US Dividend Equity ETF. We have SPHD, the Invesco S&P 500 High Dividend Low Volatility ETF. And then we have FDVV, Fidelity High Dividend ETF. The first thing we're going to go over is the expense ratio. So SPYD has an expense ratio of 0.07%, VYM 0.06%, SCHD 0.06%, SPHD higher at 0.30%, and FDVV 0.29%. Off the bat, we always ask this question: why is SPHD and FDVV charging a higher percentage for a net expense ratio? That's what we have to determine. Are they doing so because they're worth it, or are they not worth it? Because this is a dividend video, let's go straight to the yield. SPYD has a dividend yield of 3.62%, VYM 2.82%, SCHD 2.92%, SPHD 3.45%, and FDVV 2.73%. So the highest dividend yield is 3.62 with SPYD, then SPHD 3.45%, and SCHD with 2.92. So next question is, how are these different ETFs weighted? So SPYD is an equally weighted portfolio, meaning that all of the different positions are going to have the same percentage weighting in this ETF. They're not going to be very highly concentrated in one stock. There's going to be an equal weighting of all the different stocks. Next we have VYM, which is market cap weighted, SCHD market cap. So that just means the larger companies are going to have higher weightings in these. SPHD is weighted on dividends, meaning that basically the higher the dividend, probably the higher the weighting in this ETF. FDVV is a tiered system. They're probably using some different factors to determine how they're going to weight the different ETFs. Let's go over the portfolio now. So number of holdings. So SPHD and SPYD have a little more concentrated portfolio. They're under 100 total holdings. All the other ones have higher holdings, larger number of stocks. VYM has 413, so a lot of stocks in that portfolio. In terms of top 10 holdings, let's look at some of the top holdings in each of these. So SPYD, remember this is equally weighted, so these are all going to be very closely weighted. So Baker Hughes, 1.59% of the portfolio. Chevron, 1.58%. I don't even know. Organon and Company, 1.57% of the portfolio. Okay. VYM, on the other hand, and as you can see here, percentage in the top 10 holdings, only 13% in the top 10, but VYM has 23.90% in their top 10. Johnson & Johnson, JP Morgan Chase, and Home Depot are the top 3. SCHD, 40% are in the top 10 holdings. So this is more concentrated in terms of the top 10 holdings because it's market cap weighted probably. Coca-Cola is number 1, Merck, Verizon, which I like if you watch my video on Verizon stock. So next up, SPHD, 27% in the top 10. Williams Companies, Kinder Morgan, Chevron. Very different than SCHD with the top 10. FDVV, Apple, Microsoft, Chevron. So also a bit different, okay? Next up, I want to take a look at the sector weightings. Let's see how these are looking. So I do like to see which of these have the highest sector weighting and which. So financials and utilities are higher weighted in SPYD. That's interesting. VYM, financials is the highest weighting with a 21.9%. SCHD, the highest weighting is going to be financials. But then very interesting, technology is in here, which is not something I was going to think was going to be in this ETF, but I do think it's more kind of like the Intel type companies, not exactly like high growth companies. So they're tech companies that also pay dividends. Next up, we have consumer staples, so SPHD, 19% in consumer staples and 20% in utilities, so another one that has a decent amount in utilities. Finally, FDVV, the largest holdings are in information technology and then financials. If you've been watching my videos, I think this year, for me personally, I like financials. I don't really like information technology that much, so could be a consideration here as to which way I go with these. I also like the energy sector, so those are my top few sector picks. In terms of market cap, this is a large cap ETF video, so we want the majority of these companies to be weighted weighted towards larger cap companies. So large and giant, we want the majority in there. We don't want too much medium, and we don't really want any small. So how did these look? Well, SPYD actually isn't exactly the best in terms of large cap weighting. It's more of a blend. It's got some medium cap, 56% medium cap. So take that into consideration if you're strictly looking for a larger cap ETF. VYM, large cap 41%, giant 31%, only 17% and 3 in small. So this is definitely more weighted towards large. SCHD does have also some in medium, but also the majority of this fund is in large as well, large and giant. SPHD, medium 39%, the majority in large and then giant. And then we have FDVV, 25% in medium, 33% and 37% in large/giant. So here comes the part everyone loves, of course. Let's talk about the returns of these ETFs. So this chart is going back until September of 2016 time period. This is when one of these, I think it's FDVV, was the conception date of that. So that's why we're going with this time period, so a little over 5 years. So what has done the best? SPY, remember, is the S&P 500. So none of these over this time period beat the S&P 500. Now, dividend ETFs, we don't really necessarily think that it's going to beat the S&P 500 by huge amounts over long-term periods of time, because over long-term periods of time, dividend stocks probably aren't going to outperform the S&P 500. SCHD did the best out of these, 117% return, FDVV next, VYM next, SPYD, and SPHD coming in at the bottom here. Okay, so now let's take this to about 3 years and see what's going on in this scenario. Okay, so now we're going back into March of 2019 until today, 3 years. So SCHD again is on top here with 55% gain. Actually now beating the S&P 500 in this time period. Very good. FDVV is next, VYM, and then these two are also on the bottom again. Now let's go into the 1 year and see what's going on, and this is where it's going to get kind of interesting. So over the past year, the past 12 months, we now have FDVV killing it, basically 17.36%, with the S&P 500 only having an 11.87% return. So now we have Schwab on the bottom. So what do we do? Is this kind of like foreshadowing what's to come is, I guess, the question. Schwab has been on the top, SCHD has been on the top. Is it now going to start lagging behind? Now also very interesting, past 3 months year to date, SPYD is now on top, SPHD second, FDVV third, SCHD last, S&P 500 doing terrible. So I mean, it's very interesting. We need to kind of walk back here and let's paint a big picture. So SCHD has done very well, and it's a huge favorite for a lot of people in a quite different market scenario than probably what's going to happen in the next year or two, in my opinion. The question I'm asking is, was SCHD more weighted to these growth company names that, of course, also pay dividends, that really helped it with its capital appreciation side of the portfolio, but also continued, of course, giving decent dividends? And will those companies continue to outperform going forward, or will, because the market environment is changing probably in the next couple of years, is that going to start lagging behind, is the question. Now, if I'm being honest, and I know this isn't something that a lot of people that love SCHD are going to like, but I don't think SCHD is going to be the best performing ETF over the next couple of years, even though a year ago I did think it was going to. And it's because of the current market environment. I don't necessarily think their strategy is going to perform the same way as it has in the past, let's say 8, 9, 10 years in the next couple years. Now, I do think SCHD is still going to be a very fine ETF going forward. I just don't think it's going to probably have the high returns and yield that it's had in the past. I think it's going to be more mixed. So what I would probably personally do myself is I would split this between different ETFs, not just SCHD. If I was looking for good yield with potential capital appreciation as well, I would probably go with SCHD and VYM combo. So VYM was really kind of in the middle of all of the different rates of return. It's got a low expense ratio. The dividend yield isn't as high as some of the other ones, but at the end of the day, I think VYM is probably going to do decent in capital appreciation and also have decent dividend yields as well. So that's what I would do. I'd probably split it between SCHD and VYM. But I do want to take a look at the charts here. So let's take a look at SCHD's chart, see how that's looking. So here's the chart of SCHD. Now, look, I'm sure most people are not looking at entry points to ETF like this. If you're a dividend investor, you're a dividend investor. You're probably buying this. You're dollar cost averaging it. You're holding it for the long term. So this is probably not necessary, but it's fun to do. So let's just take a look at the chart. So what's going on with SCHD looking back until about February of 2020? This is an uptrend line. It pretty much, it's been consolidating, and it traded through this uptrend line, kind of just consolidating for a while. Not a while, but a few months now. We're zooming in here. This is a Darvis box, and so basically what I think is the ETF's probably going to trade within this box for a while. It's consolidating. It's going to be between about probably 81 and maybe 72. So 70s up to 80s area. I think it's going to probably trade in this range for a while. Little uptrend. It was in a little short-term uptrend. Now it's in a short-term downtrend. It might come down, test this little support area, and we'll see if it bounces. And if it does, maybe that could be a decent time to buy this if you really did care about an entry. But honestly, if you're buying this for yield, I'm sure you don't care about it. So that's my 2 cents on that. By the way, RSI declining, MACD declining, not looking good there. I would see what happens at the 72 level, go from there. Anyway, that's all I have for this video. Thanks for watching. Please hit that like button if you like this. Trying to get to 2,000 subs, so please subscribe if you like this video, and watch another one of my videos coming up on the end screen right now.